Hello again, bom dia a todos, and welcome back to my channel where we discuss all things second citizenship and residency by investment. My name is Jonathan, and today we'll be taking a closer look at the investment outlook for Portugal's Golden Visa in 2025 and helping you navigate what can be quite a tricky and confusing landscape at times. We'll skip the usual introductory materials for this video and rather jump straight into the core topic. So I cover the Golden Visa program in quite some detail on the other videos on this channel, so feel free to look around. I also refer you to those if needed, and then we'll dive into the world of qualifying investments for the Golden Visa, looking at what is eligible and what is not. Then we will take a closer look at the most popular investment category for the Golden Visa, and that is the wonderful, or sometimes not so wonderful, world of investment funds. We'll look at the options available in Portugal, do a basic sector analysis, and then analyze the topic of risk, which is, of course, an essential area of discussion when we talk about long-term investment planning. After we've addressed the theory, we will move on to some practical investment cases. So we will take a featured investment from two main approaches to the Golden Visa. That is to say, firstly, a donation style option, and then secondly, an investment style option. Now, the featured donation style approach that we'll look at starts at 168,000 euros of capital required, whereas the investment will have a capital requirement of between 300 to 400,000 euros. Next, after looking at each case, we'll also conduct a pro and con analysis for each. Whilst these are by no means the only investments that we work with here, they are two of our most popular options. And if nothing else, they should give you a good feel for the types of questions that you should be asking yourself before you eventually do commit to an investment. We'll then wrap up today's session by just recapping who we are, how we help people just like you to begin their journey towards a second citizenship and a future life here in Europe. Now, as I just mentioned, if all of this is new information to you and you are just getting started with your Golden Visa journey, I would suggest that you get started by watching my other recent video that provides an overview of the Portugal Golden Visa program in 2025. In that video, I explain what the Golden Visa is, how it works, the latest news and updates in this space that you need to be aware of, explore the process and timelines to expect this year, and also run through the road to citizenship and what to expect from that journey. Today's video is a much more zoomed in one, and I'd like us to focus specifically on the investment side of the piece here. So if you do need to revisit the essentials before coming back to today's session, please do click it please do click in the link that I've placed in the description box down below my head here and also in the top right hand corner of your screen, and then you'll be taken straightly to that overview video. Now, getting back to today's topic, let's move forward with the order of the day. Let's first set the scene then by explaining the different types of investments that are available. Now, for a little while, real estate investments have no longer qualified for the Portugal Golden Visa in any form. So real estate off the table. The viable routes for the Golden Visa as it currently stands are going to appear on your screen here, getting started firstly with job creation. So this involves creating, maintaining at least 10 permanent positions of employment in Portugal. This is obviously quite a high-risk approach and rather hands-on, so it hasn't turned out to be that popular. Even less popular, though, research activities. So essentially this entails an effective donation of 500,000 euros to scientific research institutions. Not usually the most prudent way of investing your capital. Next is another effective donation, this time at half that price. So this starts to get a little bit more popular. This time 250,000 euros invested into a cultural heritage initiative or the arts. You do not get this money back. This is a donation. So again, not usually the most useful use case when it comes to planning your investments, but it is proving popular with some investor types, that is for sure. However, categories 4 and 5 are where we see the majority of the demand right now. That's where most people look. So starting with option 4, these are investment funds. Essentially what is required here is a 500,000 euro investment into a non-real estate investment fund that must be regulated in Portugal via the Securities Market Commission here, the CMVM, and that fund must also invest at least 60% of its capital into Portuguese listed securities. Now, this category of investment funds carries a unique set of challenges and considerations for investors. Of course, we are working within a very well-defined framework. The last section here, which is certainly gaining in popularity rather quickly in recent months, is corporate investment. You may see that written as commercial incorporation elsewhere. I refer to it as corporate investment here. Now, what this essentially involves is a €500,000 investment, again, this time into a Portuguese company directly, so skipping out the middleman, no investment fund manager. And that investment must be used to create or maintain 5 permanent jobs for the Golden Visa, and usually that is done by the company that is being invested into, so it's not quite as hands-on as the job creation approach. This is a much more turnkey solution. Now, as I mentioned, option 4 and 5, categories 4 and 5 are now proving immensely popular relative to the other categories available. That is because they offer a more controlled or more structured investment journey where the investor can have a bit more influence in terms of what to expect from it. It does allow us as the Golden Visa agent, essentially to build a stronger case, a strong investment case for our clients with potentially stronger returns, more robust risk management positions, or tailor the investment towards individual attitudes to risk and investor risk profiles. And because of that flexibility, it's naturally these categories 4 and 5 where my team and we tend to focus our efforts. We may dip into the other categories, but the vast majority of what we do is category 4 and 5 now. So as I mentioned, these are the most popular ones. Now, of the 2 most popular categories, so investment funds and commercial incorporation or corporate investment, there is a lot more offer on the investment fund side. This is also where a great many investors can become confused, intimidated, or quite frankly, just overwhelmed when trying to understand their options. So I'd like to spend a couple minutes just trying to clarify this a little. First, by looking at the types of fund that exist. Now, I prefer to break this down into 3 specific types. So firstly, classic investment funds, then we'll look at sector-specific funds, and then finally alternative funds. Now, by classic, essentially what do I mean here? Your typical mutual fund style approach. Now, this could be a fund that invests in stocks and bonds, or another type of mixed asset portfolio, or one that invests 100% into the stock market, 100% equities, for example. Hedge funds, also an option. They're essentially a more aggressive take on a classic fund. Now, think higher costs, greater risk, but the potential for higher returns. Now, what's good about these classic fund styles are that you can get good levels of diversification within a structure that is relatively easy to understand if you've done some investing before. That being said, these funds do tend to carry the highest cost in the Golden Visa market. Their investment approach may be quite intransparent depending on the fund, and you could be exposed to quite a lot of volatility as the value of your investment rises and falls over time. Therefore, these are certainly not for everybody. The second type, however, are sector-specific funds. So we're talking about funds here that specialize in investments into a certain activity. For example, energy, technology, or even hospitality. Now, why does hospitality have a couple of asterisks around it? Well, hospitality funds are my personal favorite, my personal preference for the majority of Golden Visa investors. It is where my team and I focus a lot of our energy and activity. I'll explain why in just a second, but there is a good reason for that. For now, though, sector-specific funds are usually a little bit leaner, more flexible than classic funds because they're investing in fewer options fundamentally, and therefore the fund manager may have greater influence in strategic decision making, which means we can sort of build an approach that works better for our investors. Now, this influence can often mean that investors get access to far more favorable investment cases than is otherwise the case with a more classic fund. But the flip side of this is that because we are often not typically investing in as many positions as a classic fund would do, we can be a little bit less diversified. And lastly, alternative funds. So the most common type of alternative fund in Portugal would involve sustainable projects such as farming projects as well, or renewable energy focused. That can cross over into sector specific as well. We also see some activity with education funds and things like that. Now, why is that interesting to some people? Well, essentially, they do allow you to invest into a cause that you care about. When we talk about sustainability, when we talk about education, community building, sometimes that does speak to the philanthropic nature of an investment journey. Some investors like that. However, that is quite a niche investment. So it tends to only be appropriate in your financial plan if you have a very high net worth and can afford to allocate 500,000 euros in such a way. And that is obviously the minority, quite a small minority of people getting onto the Golden Visa. And so alternative is still termed alternative, at least in my mind, and is not quite mainstream. So I mentioned my preferred choice being sector-specific hospitality funds. Now, let me tell you why that is. Feel free to disagree, of course, make up your own mind, sharing my opinions here. But number one is track record and relevance, particularly so in Portugal. Why? Portugal has a very well established and robust hospitality sector, which is actually responsible for 16% of the country's GDP, roughly 40 billion euros a year. Now, considering that we need to invest into a fund that invests in at least 60% Portuguese listed securities, you are better off investing into sectors where the country excels. Hospitality is a great example of this, whereas many other sectors in the Portuguese economy are in relative infancy versus hospitality. Next, reliability. So an interesting fact about the hospitality sector is that it relies on both foreign and domestic demand, which tends to insulate it from shocks, makes it a far more dependable sector if things ever get a little bit rocky with the Portuguese economy. Hospitality has also shown itself to be very resilient in hard economic times, as holidays have proven to be one of the last things that people tend to give up when money becomes tight. That's obviously great news for investors into the sector. Number three, predictable cash flows. It is very easy to project and chart hotel performance. Again, very predictable demand, which in turn means that some operators could offer investment yields to be paid up front. And that can be wonderful news for investors for a very important reason, which is that it passes on a significant amount of the investment risk onto the hotel itself in the case of a hotel-based investment. Why? Because you've been paid up front, and therefore it is the hotel's responsibility to generate any yield, any margin over and above what you've been paid up front, which they do so using their predictable demand. Now, this is something that my team and I work to achieve for our clients whenever we can, negotiating that into the deal so that cash flows are paid up front. Again, trying to de-risk the investment as far as we can from the client's perspective. And lastly, forgive me, a little bit behind my little monologue there. Lastly, fringe benefits. Many hospitality funds can offer additional benefits to the investor, such as free vacations in the hotels that are being invested into. This can allow investors to essentially meet the 7-day per year physical stay requirement for citizenship. It allows them to do so in some style and with a minimum of fuss. In some cases, you might even be able to get some free stays that are well in excess of those 7 days, depending on the project that you go into. Now, that is not a major consideration when we are putting together an investment case or when a client is investing for the long term. Fringe benefits should be kept there on the fringes. But again, nice to have. They're always a nice little added bonus. So do be on the lookout for that. And it does make the hospitality sector a very interesting proposition. Moving on now, and let's try to avoid sounding a little bit like Captain Doomsday over here, but a few more points of order when talking about investment funds. Now, investment funds are inherently more complicated and more difficult to understand than what used to be the number one investment for the Portugal Golden Visa, which was real estate. Of course, that no longer available, but that does mean that fund-based investing can be a little bit more daunting to actually take a decision on which fund is right for you, if any, actually. So here are some key questions that I would like you to ask yourself when selecting your fund investment for the Portugal Golden Visa. Number one, what does the fund invest in? Do I like the target industry? Is it ethical? Do I get a good feeling by putting my money into this sector? And perhaps even more importantly, do I believe in the future prospects of this sector? Does it have a bright future? If you're happy with the philosophy and the future of the industry that you're investing into, then we can go on to the next issue. And that's costs. Now, this is a big consideration that can dramatically influence your investment experience. It tends not to be well understood by a lot of investors that go into funds, actually, which is why I've made it so important on this slide here. And Golden Visa investment funds in particular can be a little bit on the expensive side, which can be a little bit of a surprise for some investors. So make sure you're well informed. Now, what does this look like in practice? Well, many Golden Visa funds will levy high entry fees that will eat into your capital from the outset. Some will even levy exit fees as well on the back end when you come out of the fund. Annual management fees are part of the course. They're standard in pretty much any fund around the world, so they do exist here as well. And just to add a little bit of insult to injury, there are often performance fees on Golden Visa investment funds here in Portugal, and that's essentially where the fund manager does their job correctly and gets you a return. Now, often we can be comfortable, we can be happy paying performance fees because that does mean that we are hitting the levels of returns and the investor is usually in profit at that point. However, just be aware that performance fees can be a little bit excessive sometimes. So make sure that this is a criterion for your consideration. Some performance fees might even be as high as 50%. I've even seen 100% previously, meaning that you wouldn't even see a single cent of outperformance once a certain hurdle is reached, and that to me is not really acceptable as an investment journey. It's a little bit crazy, but anyway, the sum total of this, that these fees can add up fairly quickly, which can leave you with quite a high cost investment. So make sure you understand that fully before signing anything. Now, we don't do this with the funds that we work with here at Holborn Assets. We are quite selective when it comes to the partners that we involve in our stable of offer. But like I say before, do make sure you understand all of the costs involved with any investment before you take any decision to move forward. Okay, next, structure of the returns that you can expect. Now, we have spoken a little bit about this previously, but this can tell you a fair amount about the risk of a fund as well. So are returns guaranteed? Are they paid up front? Now, if yes, this tends to be quite a good indicator of the confidence of the fund manager to deliver on their promises of performance. If not, you may be in for a bumpy ride, or it might simply mean that the fund manager has less control. So make sure that the investment that you take is in line with your attitude to risk. Past performance is never a guarantee of future returns, that old cliche, but it is true, although it can give you some insight as to the credibility of your investment partner. So do consider past performance as part of the evaluation process when you are weighing everything up. Now, lock-in periods also key. Many Golden Visa funds require you to stay invested for a period. It might even be up to as long as 10 years, which means that you cannot access the capital easily once you've secured your citizenship in the back end. Now, this can be a little bit infuriating, especially if it wasn't expected, and it can even force you to make some pretty major lifestyle adjustments or lifestyle decisions if a significant amount of your capital is tied up for an excessive extended period of time. So please be mindful of this point. Now, if you're not sure, always ask the fund manager, always ask your Golden Visa agent for clarification before moving forward. And speaking of the fund manager, It's always good practice to run your own due diligence on the people behind any investment that you enter into. Now, not all fund managers are equal. Just like every profession in the world, there are good ones, there are bad ones. So looking into past performance is usually a good idea just to get a flavor. As I mentioned, no guarantee of future performance, but it does give you an insight as to the credibility of the counterparty. Who is it you're working with? And lastly, what is my security? With most fund investments, your capital will be 100% at risk. Now, some funds will offer capital protections or guarantees to help you minimize that risk, but you will usually pay for this through the cost structure or through the performance fees. So, if capital protection is important to you, it's important to understand what happens to your money in a worst-case scenario. Hence the question, what is my security? Could you lose it, or are you protected? Now, we will come on to this point in a little bit more detail later on in this presentation. But we do need now to address what is pretty much the primary consideration when making any kind of investment, and that is the big topic of risk. Okay, so the first step to mastering any topic is understanding it. And the first thing that we'll do on our journey to mastering risk is first understanding risk. Now, I'm assuming everyone watching this video should be familiar with the concept of risk. So let's loosely define that here on your screen as the likelihood of incurring some kind of loss during an investment journey. I think that's a pretty fair definition. It is quite a lot more nuanced than that, but that's a bit of a catch-all. Now, when investing in a Golden Visa fund, generally speaking, there are 6 types of risk factors that you should assess before taking a decision. Now, these are performance risk, concentration risk, management risk, credit risk, counterparty risk, and the risk associated with the costs of your investment, also known as the hurdle rate. So let's define these together very quickly. Now, number 1, performance risk. So this is a classic risk that might be what comes to mind when you think of the stock market, for example. So the value of any investment can go up as well as down. So this is the risk of investing in something at one price and then potentially having to sell it at a lower price because it hasn't performed in line with expectations. Hence, performance risk. Okay, next, concentration risk. This is the effect of having essentially all of your eggs in one basket. So let's say that you invest all of your money in Granny Smith apples, to take an example that I use fairly frequently. Now, that wouldn't be smart because the smallest fluctuation in the value of Granny Smith apples will have a huge effect on your net worth if you're only invested in one position. So you might choose to split your money across Granny Smith, Bramley, Pink Lady apples, Royal Gala apples. So, 4 different categories. That would be better, but you are still overly exposed to the performance of the apple market generally. So, true diversification, what is that? That would invest your money across apples, oranges, dairy, utilities, services, the banking sector, manufacturing, unrelated industries, so that when something happens to the apple market, your net worth is not hit as hard. So there are various levels of diversification. Having a great many positions is not necessarily good diversification unless you cover correlatory factors. Right. So it is worth noting that diversification is good for mitigating concentration risk, but because we are averaging across different sectors, that also potentially can limit your return. So it's a way of averaging out or smoothing the investment journey, reducing volatility. But if one sector completely outperforms, being highly concentrated in that sector can give you enhanced returns. It's less safer. It's generally done with a more aggressive strategy. Okay, next, management risk. That is a fairly easy one. Can I trust my fund manager to manage my money responsibly? Now, is he or she competent? Always a good question to ask before you start a long-term partnership with someone. So fairly straightforward. Next, credit risk, which is essentially the risk of your returns not being paid out by the company managing the investment. We might take the example, for instance, of a bank. Let's say a bank goes bust. They have your money, they have the interest payable to you, but they might simply not be able to pay you out because they're not able to due to their reserves. Now, that's credit risk, essentially. Counterparty risk. That's next. Will the company I'm investing in still be trading when I need to exit my position? Let's say I'm investing into, let's take the example of a hotel project for a term of 5 years, which is fairly typical for the Golden Visa. Now, you would want to be sure that the hotel you're investing into is still operational so that you can recover your funds after obtaining the citizenship. So, counterparty risk. And lastly, hurdle rate. Now, this isn't technically a risk factor, but it is a consideration when making an investment decision. So I had included it here on this slide. So hurdle rate, what is it? It's essentially the rate of growth that you need to see in order to break even on your investment after fees. So basically, the higher the cost, the higher the hurdle that the investment needs to jump over to then deliver you a profit. So if the cost is 2% per year, all things included, then the investment needs to grow by at least 2% so that you can break even, and then anything above that delivers you a return. That's hurdle rate. Okay, how do we mitigate these factors then? Right, let's look at performance risk first, quite a straightforward one. So invest in quality, established businesses with a good track record, proven models in proven sectors. Now, as I've said this, and I'll continue to do so until I'm blue in the face, but past performance does not guarantee a future return, but it does help give an indication of the level of risk that we might be taking on. Next, concentration risk, also straightforward. If this is a concern to you, diversify your position. Again, the trade-off might be, a smoother journey and the potential of less enhanced returns. But again, that is mitigating risk, which is what we're doing here. So make sure that you're not committing too much of your net worth to one particular investment asset unless you have a very high tolerance for risk. Best way to do this, of course, is to talk to a trusted advisor that can construct your portfolio in a smart way or perform a look-through analysis on a potential investment before you end up committing to it. Okay, management risk next. Again, straightforward. Perform due diligence checks on any fund manager before you commit. You want to be sure you're dealing with trustworthy people like you would with any business deal. This is pretty much common sense, right? Okay, credit risk, a little bit more interesting. This is where I would recommend looking for investments that can offer the potential of upfront returns, for example, so that you can be paid before the investment journey takes place. Now, not only does this eliminate credit risk, but it's also a good indicator that you're investing in a solvent, quality project or fund. Counterparty risk can be eliminated through good due diligence on the fund manager, yet again, and the projects being invested into. And hurdle rate can be mitigated by prioritizing low or zero cost investments wherever possible. It's not always possible, but always make sure that cost is a consideration in any decision. Now, in summary then, invest in quality. Diversify where appropriate, do your homework on the people involved, and prioritize low-cost investments that offer the possibility of upfront returns. Now, if you do all of these things, you should be in a better position than most. So, now we know what we should be looking for in an investment, so let's touch on the current state of play in the Golden Visa investment fund market. As of right now, there are around 50 eligible funds for the Golden Visa. These options vary hugely in terms of quality, cost, investment philosophy, capital tie-in periods, performance history, and even their tax treatment in some cases. Basically, everything that we've been mentioning up to now, although we haven't really spoken about tax, that is a topic best kept for a one-to-one suitability meeting where we look at the best options for your situation. Tax is a rabbit hole that I don't think we should be diving into in today's video. Right. If I'm not your cup of tea, as an advisor, as an investor, that's totally fine. But I would always recommend that you speak to a trusted advisor, someone that has a good reputation in this space to guide you along this process. I like to think that I'm included in that. But if that's not me, if it's someone else, that's totally fine. But make sure that you get a good second opinion. Going alone can be a little bit dangerous. Taking the right investment decision for your own individual circumstances can legitimately be the difference between a great experience, something that enhances your life over this this particular journey, or it can lead to a long-term headache that can be quite financially damaging if you misstep. So again, I can't really understate the importance of getting good advice from someone that you trust. Fortunately, though, advice, I don't know if the advice will be good or not, but advice is usually free when it comes to fund selection. Certainly is in our case, and that's because any Golden Visa agent worth his or her salt will offer this as part of a complimentary part of a wider onboarding process. So in the same way that you expect to maybe go on a few dates before you get married to someone, this is a long-term process, and we believe that you should be able to make sure any service provider is a good fit for you and your family before you make a commitment to work with them. So that advice, at least initially, should most likely be free. Right, moving on. Let's cut to the chase and tell you a little bit more about our featured investments today. Now, I mentioned we would be looking at 2 scenarios. We're going to get started with a donation style option. Now, whilst there is the official donation route, which we mentioned at the top of the show, and that is a donation to culture and the arts at 250,000 euros. There's also the other research activities at 500,000. Again, not much loved. It's more culture and the arts at 250 that attracts the attention. We are now able to offer a viable route to the Golden Visa that uses an effective donation of just 168,000 euros. Significantly cheaper than the official donation, and it receives exactly the same investment journey, exactly the same treatment from the immigration authorities. Now, this is the result of a partnership that we have in place between our team and a private financier. This is an exclusive investment case. You won't find this anywhere else. How it works is the following. An initial deposit is required. That initial deposit is of 20,000 euros, and that is essentially used to secure your position in the investment and begin the setup process. We will then obtain tax numbers for you in the usual way, open the bank account again in the usual way, and then financier approval is granted and the balance of 148,000 euros is transferred over to them from you. So that would be a total of 168,000 euro as a sunk cost. That is the cost for this structure. Okay, so that's the costs I dealt with. Now, after that, the lender, the financier, will deposit 500,000 euros into your account outside of Portugal. Those funds must then be brought back into your Portuguese bank account and then deployed into a qualifying investment fund for the Golden Visa in your name. That fund, incidentally, is linked to the financier itself, which is how it makes sense for them as part of this arrangement. Now, that fund investment must remain in place. That 500,000 euro, the loaned capital, must remain in place for 7 years, which will essentially allow you as the investor to use this investment to obtain the Golden Visa and then subsequently apply for citizenship in the back end before you divest and leave this investment. How that actually works is after the 7 years, this 500,000 euro fund investment will be transferred back to the financier, transferred back to the lender, along with any gains and along with any losses, in exchange for cancellation of that 500,000 euro loan. So what does that mean? The applicant, you, the Golden Visa investor, has no exposure to investment performance. You pay 168,000 euros upfront, and the rest is taken care of for you with no ongoing risk. Also, no ongoing reward for that matter. You're given a loan of 500k that's invested into a fund that's managed by the lender, and then after 7 years, that loan is cancelled because you surrender the fund units back to the lender, and then you walk away with your citizenship in your back pocket. Now, getting a Golden Visa for just 168,000 euros and ultimately citizenship, for such a low price, that can be quite compelling for those that are unable or unwilling to liquidate sufficient funds for a more classic investment approach, for example, or those who just want to put in some capital, write it off and walk away. It's not as lucrative or not as financially sound as making an investment. In some cases, it really depends on your individual circumstances, but getting Golden Visa and citizenship in such a way Again, my apologies. I am behind my little monologue on the slide here. I keep forgetting to press the button. But this can be a very, very effective investment option for people looking to do this with as little capital as possible. Okay. Maybe you don't like the idea of a sunk cost. Maybe you'd like to preserve your capital. Maybe you'd like to see some kind of a return on your investment. If that's you, then you may wish to consider an investment approach instead. Now, more capital is of course required here. As with all Golden Visa investments, a €500,000 investment will be required into our featured investment for today, which is the Navigator collection. What is the Navigator collection? That is a chain of 9 hotels of varying sizes and customer demographics across Portugal, majoritarily in the Algarve, but a little bit of presence outside it as well. However, despite this €500,000 entry point, in this case, the income yield for the lifetime of the investment, which is €101,000, will be paid back to you up front. Upfront returns, just as we were talking about previously. This means that before we account for government and legal fees, you can access the Gold Visa for just €399,000 of investable capital, which is a good discount on the original €500,000. Upfront yields like this are rare, especially when the return level is as high as this. So if an investment of €500,000 feels like too much for you, this could be an interesting route into the Golden Visa. Now, the €101,000 return is the full investment case for a 6-year period. So no more income during that time, but there is the possibility of additional returns at the end of the investment journey. More on that in a second. But this income return is fixed and upfront, giving you absolute certainty from day one. Okay, so how does this actually work? Well, it's simple. You will make a first payment of €399,000 into the Navigator collection, and then you would receive a €101,000 return back to your bank account outside of Portugal. This return must then be sent back to your Portuguese bank account, and then it can be reinvested again into the Navigator collection, creating a total invested capital of €500,000, of which 101 is the reinvested upfront return. Now, remember, you must move at least €500,000 from your non-Portuguese bank account to your Portuguese bank account first to qualify for the Golden Visa, and then invest that capital into a qualifying investment. So that's why we structure the investment in this way. I know it appears a little bit convoluted. Now, if €399,000 is a little bit too steep for you at the moment, we also have some private financing options that can reduce the capital requirements down to just €325,000, and that's with some direct from developer financing, and the rates on that are actually extremely interesting. You can actually get, at time of recording, a cheaper rate of interest on that loan than some government bonds that you can get in the UK or the USA, actually, which is quite remarkable to get private financing that is cheaper than the risk-free rate of capital in an economy. So that is interesting, even if you do have the €399,000 available. Now, I'm not going to go into the ins and outs of this particular case here because there are various nuances that we could explore. I have explained this previously in another video discussing one particular hotel within the Navigator collection. That's the 5-star Royal Obidos Spa and Golf Resort, which is actually pictured there on the right-hand side of your screen. Now, what I will do is I will place a link to that video in the description box, again, down below my head. Feel free to check that out if you'd like to learn more about how these financing options work. Now, depending on when you're seeing this video, the underlying real estate asset that is used to secure the investment may change. We've used the Royal Obidos quite a lot in the past. It's been very popular, so capacity is extremely limited. We may use a different real estate asset across the Navigator collection for that particular investment, but still, go and check out that video if you'd like to learn more. Okay, perhaps the most important part of a large investment like this is the exit strategy. How will I get my money back once I have citizenship? What are my options? Now, there are two guaranteed exit strategies with the Navigator collection investment. Now, the first is very straightforward. It's a quick exit to €500,000 cash after the 6-year investment period is complete. So therefore, total return over the 6 years is €101,000. We can extend these timelines if you need to do so for your citizenship journey. That would be a quick, straightforward way to receive your capital back. As I mentioned, total return on investment €101,000, which is really not bad at all. Alternatively, you could even roll the funds into a real estate asset within the Navigator collection, which is selected at outset. For example, this might be a one-bedroom apartment in one of their more upmarket hotels. I mentioned we've done this quite frequently with the Royal Obidos Spa and Golf Resort in recent months. So you might choose to do that instead of receiving the payout. Now, the real estate asset selected will depend on availability when we speak. This is something that is quite movable. So, we will go into greater details if you decide to book in a consultation with yours truly. You're very welcome to do so. Instructions on that will be there on your screen at the end of this video. So you can essentially exchange your investment for the title deed to high-value real estate at the end of the journey instead of receiving the payout. Now, the real estate asset that is selected, I repeat, at outset, will have a value at or somewhere near to the €500,000 mark at the time of investment to ensure full asset coverage and a robust security mechanism on your investment. The added bonus of this is that it gives you the possibility of accessing enhanced returns through capital appreciation seen during the investment journey. So if the underlying real estate asset is worth more than the 500K when we come to exit after 6 years or even longer if you decide to extend, then you can exchange for the title deed and then sell it on and realize that profit. It's entirely up to you. You can continue with that real estate asset or you can take the profits out as cash, or you can even retain the asset for the long term, which a lot of people are planning on doing because it's a very interesting, cash flow generator, as we can explain in private meetings if that's something you'd like to explore. Right, okay. We do have 4 years to decide which option to choose, so you don't need clarity on that when you begin this journey. So don't worry, you don't have to decide whether it's cash, whether it's real estate. What most people are doing, what I would recommend most of my clients do, is sit back, watch the market, understand how everything is evolving during the first 4 years of their investment journey, and then take an informed decision a little bit nearer to the time as to which makes more sense. If the underlying asset has appreciated in value significantly, it may make more sense to exit to the real estate, but if the market is flattened out a little bit, then a simple quick cash out may make more sense. Now, another interesting point, as we know, property no longer qualifies for the Portugal Golden Visa, so it is increasingly difficult to find investments that offer any kind of a security guarantee. But here, we are not investing into real estate, but instead into the Navigator collection, into a hotel chain, a company that manages real estate assets, and actually in this particular case doesn't own it. So we still qualify for the rules as they currently stand in 2025 using this investment. But we also have the added benefit of being able to use the underlying real estate as security collateral. So if anything happens to the hotel chain during this time, we have private agreements with the landlord, that's the property developer that develops the units for the hotel chain, wherein if the hotel chain were to go bankrupt, you would be able to exchange your investment for the title deed to the real estate asset. Therefore, the asset is used as security collateral. So if anything happens to the hotel chain, your default position would be to inherit a high value asset. This reduces the risk of the investment considerably versus other options that are available in the market. This type of security backing is very, very rare, especially now that real estate investments are off the table. Now, Both of these options are, of course, guaranteed and secured via a forward contract. And if that wasn't enough, investors into the Navigator collection will also receive generous free stay allowances in their hotels, up to a massive 6 weeks per year of free stay, a month and a half of free stay per year in high-end hotels across Portugal. Not a lot of investments in the Portugal Golden Visa space can offer that. As I mentioned, that is a fringe benefit. It's not necessarily a factor that should come into any decision. You should look at the financial implications first, but having a benefit like that is certainly nice to have. Okay, let's do a quick comparison now between these two examples that we've looked at today. So starting with price point. Now, naturally, the donation is by far the cheaper of the two at just 168,000 euros plus fees compared to 325,000 euros plus on the Navigator collection. However, the donation offers no return on investment, no return of capital, unlike the Navigator collection investment, which does offer a very good ROI for the risk level being taken on for this investment, and of course, a full return of capital at maturity. Now, the innovative walkaway financing, the donation-style approach, is the lowest capital requirement to access the Golden Visa that I am personally currently aware of. I have not seen anyone that's ever been able to access the Golden Visa for less in my many years of doing this. Now, whilst the investment route does require more than twice this capital amount to access it, this is still far below the standard 500,000 euro threshold to access the Golden Visa, making this a very low capital requirement in the context of the wider market. Now, in terms of risk, there is essentially none with the donation-style approach. You put up the capital, it is essentially just a sunk cost. The Navigator investment does carry an ongoing investment risk, but that's the price we pay for the potential of capital returns at the end of the journey. Now, this risk is managed through robust security mechanisms that include asset backing, as we've just seen, in a way that is fully compliant with the Golden Visa regulations as they stand for 2025 here in Portugal. To conclude, not yet concluding. The donation approach is also, of course, set and forget, whereas the Navigator collection does give you the option of those fringe benefits, i.e. free stay in the hotel or one of the hotels across the hotel chain. It could be argued that the donation style approach, which is quite innovative, is the simplest and most hassle-free way to access the Golden Visa right here and right now, whereas the Navigator collection might appear to represent the most financially prudent case for the majority of investors. Of course, what is right for you will depend on your personal circumstances. So again, I will leave that with you, and that's something we can discuss in personal meetings if you'd like to go that way. Now, just to wrap up today's session, let me quickly introduce who we are. Why am I qualified to talk about these kind of things? Well, I'm a partner here at Holborn Assets. We are one of the largest expat wealth management firms worldwide. We are wealth managers by trade. We've been going for more than 25 years. We are currently the #1 Golden Visa agent in Portugal. Our team has processed over 10% of all the Golden Visas ever issued in Portugal to date, and that's more than 1,000 cases. We are rated excellent on Trustpilot on the basis of more than 2,000 reviews. As I mentioned, we're not just Golden Visa agents, of course. Our wealth management business looks after more than 20,000 clients around the world. And interestingly, our size and relevance in the market does mean that we can access exclusive investment funds with certain fund managers and other investment cases as well, also negotiating preferential terms and conditions for our clients along the way. Now, you might be surprised at what we can achieve for you if you give us a good brief after speaking with us. So I do recommend getting in touch with us to explore, and that, of course, is on a no obligation basis. You can book a meeting with myself directly by scanning the QR code that's in the bottom right-hand corner of the video there, or by clicking the link in the description box again down below my head, which will take you directly to my calendar. Now, as I say, we have access to unique investments that you won't find elsewhere, which we have designed to be the best in the market. So it's quite likely the conversation will be worth your time. Of course, you can always drop me an email for any questions. I'm very happy to help you wherever I can. So you can do that via jonathan.ralph@holbornassets.com, as you see on your screen now. And that is all for today's session. Thank you very much for joining me. As always, I hope this video gave you some food for thought as you analyze the options available to you for the Golden Visa in Portugal in 2025. If you would like to learn more, then I would cordially invite you to book in for a free consultation with me and my team. Again, no cost, no obligation. We will look at your personal circumstances, run through the most suitable options in the market for your needs. We are the #1 Golden Visa agent in Portugal. I like to think there's a good reason for that, and that does mean that we have access to exclusive investments only available via us. And, as I mentioned previously, we can put together packages that offer preferential terms and conditions for you as the investor. I would strongly recommend speaking with us before you move forward with any investment, because you may be surprised at what can be done. Consultations, as I mentioned, are free. Book in using the QR code on your screen there, or use the booking link in the description box down below my head. If you're watching this on a mobile phone, that is where you will need to go. Thanks again for joining me here today. As always, pleasure to have you along for the ride. Have a wonderful day ahead, and I will see you again very soon. Take care, and bye for now.